Is it possible to believe that a major company can't fail? Well, we are here to talk about one of such companies. Despite the difficulties in launching new products, the expansion of geopolitical tension, and increased competition, Intel is investing to meet the demanding situations it faces. The percentage value indicates that the market expects the worst-case scenario, but this company is too big to fail for the US economy. Why? Hey everybody, in today's video, we're going to be looking at why Intel is too big to fail despite its downfall. But before we begin, consider subscribing to my channel and smash the bell icon to get tuned. Done? Now let's begin. Industry tailwinds will boost revenue. Industry tailwinds are creating long-term demand for Intel, even as it struggles to execute new product launches. And President's research predicts that the global semiconductor market will grow by 7% consistently with the year 2021 to 2030. In addition to the global semiconductor industry, Intel supplies the following markets, of which it is poised for strong expansion in the coming years. There will be revenue expansion despite market percentage losses. While still accounting for 75% of the processor market, Intel is wasting market share on advanced micro devices, AMD, which has benefited from poor execution of Intel product launches to segments. Intel's diversified product portfolio helped the company achieve its earnings in 2021. Client computing, that is PCs, has long been Intel's largest segment, but the company has managed to shift its business into higher growth segments such as Internet of Things, which grew 35% year-over-year in 2021. While visitor computing revenue has grown for 6 straight years, Intel's non-visitor computing segments have grown even faster. Intel has strategic change to regain technological leadership. Intel recognizes that technologically, it is its competitor, and its new CEO has unveiled an ambitious plan just 6 weeks after taking the helm and marks a strategic shift in the way the company conducts its business. Intel is moving towards a developer-centric approach based on openness, choice, and trust. This is marketing to offer high-end foundry facilities that will compete with Taiwan's semiconductor manufacturing company. Historically, Intel has steered away from the casting technique in components to protect intellectual property by being more open about its technology. The company benefits from leveraging its component partnerships without creating new competitors. A concrete example is Intel's collaboration with International Business Machines, which aims to beat TSMC to market with 3nm technology. As part of this component partnership, IBM is leading the logical design paintings and Intel is managing to manufacture. Consider getting into semiconductor manufacturing. IBM is taking credit for this component association because Intel's logic design will be optimized for IBM device languages. Intel's strategic plan drives long-term volume and profit expansion by focusing on 3 areas, and they are product leadership. The company has embarked on products that return the company's generation to a position of generation leaders while increasing its overall production volume. After falling behind with the delay of its Intel 4 product, the company plans to offer 5 new process nodes in 4 years to regain its leadership position. The company actually offers Intel 7, which is similar to AMD's more complex data mezzanine chip and is on track or ahead of schedule set in July 2021 for Intel 4, 3, 20A, and 18A. Third-party foundries. In addition to producing chips for others, Intel designs its chips with the flexibility to be built by third parties. By designing more of its products to take advantage of the merits of outside foundries, the company will become more flexible due to production interruptions. Flexible and modular designs also allow the immediate incorporation of innovations. Intel Foundry Services. Starting a foundry business creates an additional revenue stream that leverages the company's business relationships, intellectual assets, IP, production expertise, and deep pockets. Foundry consumers will have the opportunity to create highly custom-designed products that integrate their own IP with Intel's internal production IP. Intel's leverage scale to execute growth initiatives. In terms of revenue, Intel is the largest company in the semiconductor industry and is more incorporated than its competitors. Intel designs and manufactures chips and is now getting into the foundry business. The company does not generate the maximum profit in the industry, but it also spends the maximum in studies and progression. The status quo of foundries allows the company to further monetize its decades-long design and production experience beyond its chips. Building a foundry business is expensive and opposed to assignment proposals that never materialize, but Intel shows it is serious about building foundries. In 2021, the company announced plans to invest $20 billion to expand 2 new smelters in Arizona, and an additional $20 billion to build 2 new smelters in Ohio. Additionally, the company will invest $10.5 billion to equip existing sites with complex packaging capabilities. Intel laid the groundwork for those new investments by lobbying and receiving local, state, and federal incentives. Given Intel's expected investment point, investors deserve to take comfort in the fact that the company is making money from its smelter-related initiatives. Over the last 5 years, Intel has generated $50.4 billion, 26% of market cap, in free cash flow. Intel's cumulative FCF since 2016 is 1.4x that of Taiwan Semiconductor Manufacturing Company, TSM, 2.2x Qualcomm, and 25x Advanced Micro Devices. Intel reduces industry exposure to Taiwan geopolitical risk. Intel is starting a foundry business as China threatens Taiwan by increasing demand for foundry capacity outside of Asia. The existing shortage of semiconductors highlights the world's heavy dependence on Taiwan, which accounts for 63% of the world market. Taiwan Semiconductor Manufacturing Company accounts for 54% of the global semiconductor market and is by far the largest foundry for factory-less semiconductor corporations that outsource production to a third party. Any disruption in this region has significant ramifications on the global supply chain. Intel's established business presence in the US and Europe will benefit from increased demand for chips from Taiwan. Diversified consumers and production mitigate dangers in China. Intel is highly exposed to China and will undoubtedly suffer losses in the market if geopolitical relations are hostile. However, Intel's regional diversification means that 73% of its sales are outside of China. By favoring Chinese companies, the Chinese government has inadvertently created a scenario in which Intel has more to gain by globally blocking its Chinese competition than it has everything to lose by excluding China. More importantly, Intel's production is more regionally diverse than the industry that is incredibly reliant on Taiwan-based production. If the geopolitical scenario continues to worsen in Taiwan, Intel may see unprecedented demand for its foundry products and services. Increase in domestic interests, extra risk related to China. In recent decades, increased production in Taiwan has come at the expense of production in the United States. The vulnerability of UNIS, growth in the semiconductor supply chain, accelerated once COVID hit. Lawmakers are taking bipartisan action to fund a localized semiconductor industry as the CHIPS and Competes laws demonstrate. China, Intel, will most likely source from its home country, especially if relations with China deteriorate. Trade restrictions are already adding more barriers to Chinese competition. For example, US industry restrictions prevent the Chinese government's subsidized Foreign Semiconductor Production Corporation, SMIC, from loading the excessive ultraviolet apparatus, EUV. It wants to make more complex chips. In August 2021, the United States Department of Defense awarded Intel a contract to source semiconductors for critical formula products from the Department of Defense. As the Department of Defense seeks the safety of its critical formulas, it is very likely that US manufacturers such as Intel will get even more business. Innovation in China's Achilles heel. Successful semiconductor production requires large sums of money and semiconductor production. The Chinese government is offering one such resource, and it does, but it cannot reflect the energy required to run a successful cutting-edge semiconductor operation. China has been transparent about its goal of expanding its semiconductor industry in 2020 alone. China registered 22,000 new semiconductor companies. However, it is wrong to think that China's plan to develop its semiconductor production means that the country will compete in the global semiconductor market. Industrial production as it has done in other industries such as clothing and steel. China has shown itself capable of replicating production processes, but has long struggled to innovate. President Xi Jinping, in a January 2016 speech, said that the weakness of the Chinese economy is reflected in the lack of strength in the capacity for innovation, which is the Achilles heel of the leg of an economy. Constant innovation in the semiconductor industry protects Intel from the disruption Chinese corporations have caused in other industries by simply copying existing technologies. China's inability to be a generation leader means it will require more complicated products made by corporations outside the country, such as Intel. Put simply, the Chinese may not be able to keep up with the country's progress at the speed necessary to become a major risk to Intel. What noise traders are missing with Intel? Earning outperform or increased collaboration may drive stocks higher. Despite the negative news about Intel's ability to execute its product launches, Intel has beaten earning estimates for the last 12 quarters. Doing so could send shares higher. If Intel attracts new foundry consumers like Qualcomm and Amazon through its redesign efforts, the market will realize that Intel is well on its way to executing its foundry strategy. More expansion for this new segment would be a good idea for Intel stock. Additionally, if the company continues to expand its appointments with the Department of Defense, the company's bottom line could see a boost that would drive shares higher. Dividends and percentage buybacks can only offer a 6.7% return. Intel has increased its quarterly dividend every year since 2014. Since 2017, Intel has paid $27.4 billion, that's 14% of existing market capitalization, in cumulative dividends. The company's current dividend, when annualized, yields a 3.0% yield. Intel also returns capital to shareholders through percentage buybacks. From 2017 to 2021, the company bought back $44.6 billion, which was 23% of the existing market capitalization of shares. The company has $7.2 billion left on its purchase authorization. If the company uses its remaining buyback authorization in 2022, the buyback will provide a 3.7% annual return at its current market capitalization. Intel's executive pay plans can be improved. Regardless of the macroeconomic environment, investors seek corporations whose executive pay plans directly align the interests of executives with those of shareholders. Good corporate governance holds managers accountable to shareholders by encouraging them to allocate capital wisely. Also, Intel compensates executives with salaries, bonus money, and long-term inventory awards. With all these joined together, we hope you've seen all of why Intel is too big to fail. I hope you like this video. If yes, then kindly click the like button and subscribe to the channel, and don't forget to smash the bell icon to get notified, and we'll see you in the next video. Goodbye for now.